Are you looking to improve in your trading experience using the RSI? Well, in this video, I'll be teaching you what exactly is the RSI and ways how you can trade it. Hey guys, my name is Napoleon from Stock Nerds. And yeah, if you ever search the web, there's so much video on the RSI. Well, in this video, I'll be showing you the basics. Also, make sure to stick around to the end of this video because I'll be showing you 2 RSI patterns that you can implement in your next trade. So yeah, let's get on with the video. Okay guys, so what exactly is the RSI indicator? So the RSI basically just means relative strength index, right? And what this shows is when a stock is overvalued or undervalued. So we can look right here, and this is the RSI indicator, right? So when the stock is undervalued, as we can see right here, it shows it on the RSI indicator, and this is when the stock is overvalued. And generally, what we can see is when the stock is undervalued, it's around 30, and when the stock is overvalued, it's around 70. So if you take a look onto the right, you can see the RSI formula. And what the RSI formula basically is, it shows the average days when the stock is up versus the average day when the stock is down. But we don't really need to focus on that because we have everything. The computer already did everything for us. I mean, the platform already did everything for us. So now let's take a look in the 2 RSI patterns that you can use. All right. So the first pattern that I'm going to talk about is the uptrend pattern. All right. And right now we're looking at Apple stocks, and this is on the 180-day analysis. All right. So we're just going to zoom in here. One thing with the uptrend pattern, just real quickly, you usually use the uptrend pattern when stocks has been uptrending, right? Like stocks has been uptrending for a while and it takes a massive pullback. Since stocks has been uptrending for so long, when it does take a massive pullback, chances are it will actually recover and continue to uptrend, like we're seeing right here. So looking at the RSI and also looking at this pattern, what we can see is that the stock actually had a massive pullback. And then we can look at the RSI and see that the RSI is showing signs that the stock is undervalued. So this could be a great time that you can enter the trade, or you can think about entering the trade. And then as the stock continues to uptrend, right, and it reach close to the overbought side or the overvalued side, this should be a time when you should continue. I mean, this should be a time where you should consider exiting the trade. Now let's look at another example. Let's see. Because with this trade, I think the percentage that you could have gained off that trade, let's say that would 4%. Look, and in general, when the stock is just uptrending without having a massive pullback, this you could have obtained within 5 days, 4% or around 4.5%. But in general, if the stock was just uptrending for Apple, this would have took 9 days or even more to achieve this. And if you even want more percentage on using this pattern, you just have to opt for stocks that are more volatile. So AMD is a stock that is more volatile than Apple, and you can also see it right here that AMD was uptrending and it took a massive pullback. So when focusing on this as well, we can see that the RSI was showing signs that it was undervalued, right, around this region. And then when we saw the RSI showing sign that it's overvalued right here. So even looking at this, you can see that it showed 16% that you could have gained by trading it using this pattern. So another RSI pattern that I'm going to show you is the bullish divergent pattern. And we're going to take a look at Tesla. So guys, when looking at Tesla, so this is the bullish divergent pattern when looking at Tesla. So first, with the bullish divergent pattern, it's going to consistently a downtrend, and then it's going to hit a support. And then once it hit a support, it's going to uptrend and then come back and make another support. So it's going to test that support. So when we're looking at this, just from off the graph, you can see that it's having lower lows. It's having lower lows. And what lower lows are is just basically telling you that each high, each peak is lower than the previous peak. So that's lower lows. So we're looking at this graph and we're seeing lower lows. However, when we look at the RSI indicator, we're seeing that it's actually having higher highs, because right here, we're seeing that it's low, but on the next support, we're seeing that it's higher. And this is the bullish. And this is considered the bullish pattern. So chances are you can get in around this area and you can ride the stock until it goes up, or until the RSI is showing signs that it's overvalued. And then this should be a great time to get out of the stock because it's showing signs that it's overvalued. Also, let's say for example that the stock didn't actually go up, right? Let's say for example the stock actually break this pattern, right? So what should you do? When a stock breaks the bullish pattern, automatically you should be thinking about exiting that trade. So that's the beauty of the bullish pattern, is that your risk management is so small. Your percentage loss is so small, because the thing is, once it breaks this pattern, you should get out of the trade. It's not like you have to stay in the trade and watch the stock go down. Once it breaks the pattern, you should get out of this trade. Okay, so let's look at a different stock, or actually an ETF, and look at this pattern as well. So right here on ticker symbol UGAS, we can look at this pattern as well. So when looking at ticker symbol UGAS, we see it once more again, and we see it, boom, it create this support. It uptrended and came back down to this support. However, when we look at the RSI, it's too different. This is showing signs that it just came back to the support, but this RSI is showing a sign of an uptrend. And once again, it uptrended. Now let's look at the bearish pattern, which is basically just the opposite of the bullish pattern. So we're looking right here and we see that it uptrend, it came down and uptrend again. However, when we look at the RSI, it's showing signs that it was at a much higher peak previously than the one that it is now, and it's also showing signs of downtrend. So if you ever got into the stock, right, and you see that it came up to here, just by looking at the RSI, you can see that it's having a downtrend pattern. So this should be a time that you should get out. Or if you're shorting stocks, you could be thinking about entering the trade right here. Yeah, guys, so if you found this video helpful, please make sure to like and subscribe, and comment down below which other video you would like to see me cover. And yeah, see you on the green side.